Hello everybody, welcome to your TraderMerlin show. It is your Tuesday afternoon, a very exciting day out there, not only from the economic announcements, but we had Google reporting earnings and a bunch of other great stuff. So we'll dive into that as we progress through today. I'll let you guys know I may be doing some slight modifications to the programming here as I was reached out to by a friend who might want to include me on some other channels, which means I might have to create pauses to add in certain things or maybe even lengthen the show. Who knows? But no, just giving you a heads up, there might be some changes coming here to the format of the show, not necessarily the time. We'll keep it at the same spot. All right. So this week, obviously, we've got Google reporting, just reported. We have, tomorrow will be Facebook, and then Thursday we have Amazon. So three absolute behemoths. So I figured let's talk about the main one that's coming out today or came out today. And it's not just about their earnings. It's about what GD just posted in the chat right there, which is a 20-to-1 stock split. So let's talk about Alphabet to the rescue. Now, it's not that the NASDAQ was dying by any means. You see, I guess I didn't put the NASDAQ all the way up the hand, but I wanted to create kind of a fun little graphic showing Google saving the NASDAQ. Well, let's be honest. The NASDAQ wasn't in dire straits or anything. It certainly had shown some negative activity over the past couple weeks. Here is your NASDAQ, and this 4-day bounce we've had is pretty darn good, right? It looks great to the upside right now, and of course, right now in the after-hour session, it's up even more because of the Alphabet announcement. Now, you guys might recall a few days ago, I asked you, I said, you guys tell me, what would it that would act as a catalyst for this market moving forward? And some of you mentioned earnings, right? Certainly some earnings, but I think the prognosis for this level of earnings is probably going to start to slow, especially if we see rising rates. And then a couple of you said, stock splits. I think someone mentioned Amazon. Yes, right? That is one of those saving grace pieces that all of a sudden makes prices look much cheaper, much more accessible to those Reddit and Wall Street Bet users. And of course, if you saw the news today, not only did Google beat, and I will show you their beat announcement. Here is the earnings calendar for today. You can see Google beat by only about 15%. At one point, we'll see what they're up right now, but they were up about 7.32% when I captured this image. And that wasn't necessarily because of the earnings. To me, it's because of the 20-to-1 stock split. Now, Google obviously trading at a much loftier price than most securities. And of course, when I say Google, I'm mentioning both of them, GOOGL and GOOG. And here you can see right now, you've got GOOGL, which are your Class A shares. Right now, we're closed at 2,752. Right now at $29.65, so up $210. So roughly almost 8% jump up in the after-hour session. Sure. Oh boy. So if we look at that right now, we see this. I'll put a black line or a horizontal line up at the top just so you can see where we are at. And conveniently, it comes right into this last area where it had some difficulty going through. Pretty much its all-time highs. I actually thought we might stop earlier, maybe this 2,800, but we blew right through that. And I'll show you the 5-minute here so you can see how it happened. It wasn't like a big gap up. It had a huge, it took about 10 minutes to shoot up to that level. But right now, things looking really good for Google. Now, as you can notice, let's just round it to, let's say, $3,000 here for Google. Well, that means that when this thing splits, you're going to be looking at, $150 shares. That is going to make a lot of people very happy. And you guys might remember yesterday, I think it was yesterday or day before. Actually, what is today? Today's Tuesday, so it had to be yesterday. When we talked about Amazon, I threw it out there and I said, it'd be crazy to see something like a 100-to-1 split. Now, you don't usually see those. The craziest thing I've ever seen is a 500-to-1 reverse split, which is where something gets so cheap it turns into like a fraction of a penny, and they try to keep it listed on an exchange. So they do a reverse split and say, oh, it was worth 1 penny, now it's worth $5, just to keep it above the minimum thresholds that the exchanges require. In this case, you're looking at something that got so damn expensive, they just said, you know what, let's just split this, let's make it much more desirable. And to me, one of the reasons you do this is to, I guess, get a last pump in your security. Because if you're not doing it because of earnings or expectations going forward or products or services, you have to find something to juice the stock. And I may sound, a little bit skeptical here on Google, but doing a 20-to-1 split is just a great way to get the masses to buy your security because they'll feel like they'll have 20 times more when it finally does split. So Google's going to have a nice pop-up tomorrow. It's definitely helping that NASDAQ right now. We'll bring up the NASDAQ futures here so you guys can see what's going on there on a 5-minute basis. And this pop right here, it's Google. Google's what caused all that, right? Yeah, GE did a 10-to-1 reverse split. The funniest one that I ever remember, it was, oh man, let me see if I can, HMNY, Helio Mathis, New York, HMNY. This is the craziest ones I've seen. Yeah, Helio Mathis. These guys did a 500-to-1 reverse split, and it still died. You know, this is garbage. This is just a trash company, but they did a 500-to-1 split. I'll do a monthly here so you guys can see. This used to be MoviePass, right? Where you could go to any movie theater, you buy, I forget what the name of it was. It was MoviePass. But you could buy this one little package for like a month and you go as many movies as you want. These guys were, look, you can see the price back here on a monthly going back into 2017. It's the equivalent of being $9,600. Yeah, no, it was never up there, folks. This thing is just going to 0 and 0 and 0 and 0. All right, exactly, Steven. So now, and again, this is something that Tom mentioned the other day. He said, look, if Amazon were to do, a 20-to-1 or 100-to-1, it would be back on my options radar and allow me to do some options trades on it. And I think now that's another consideration for Google. It's going to be much easier for people to get into some options trades on Google. So why not? That, to me, will most likely act as a catalyst for the market moving up. And as Naum just says, nice for the Qs. Yes, nice for the Qs because the NASDAQ, just trivial pursuit question, when we combine the two, because you remember Google, or Alphabet, I will always call this thing Google. Google split, right? They have Google Class A and Google Class C. I think Class C has voting rights and Class A does not. I might have that backwards, but one of them has voting rights. The other one has no voting rights whatsoever. Just so we can see what your guesses are, what percentage of the NASDAQ 100 does Google comprise, right? What does it make up in that index with regards to weightings of the components? I'll bring it up for you right here. NASDAQ 100 weightings, but I'm just let you guys type it in just to have some more fun. I agree, Big Eb. I think there's a lot more splits coming. It would not surprise me at all to see Amazon on Thursday say that they're going to split as well, right? We talked about that. Remember, Big Eb, you were going, I don't know if Amazon's going to split. I think they are, man. I think they are. They're getting too pricey. So let me show you as you guys type in your guesses as to what percentage the NASDAQ or Google is of the NASDAQ. Here it is. Market says 15%. I will show you right now. Tom says 5. Well, you can see over here you've got Alphabet. Those are the GOOG shares are 3.8%. And then the GOOGL shares are 3.6. So it's roughly 7.4% of the NASDAQ. Peasant, that would be a pretty heavy weighting. Nothing's that much. And I'll tell you what, I'm glad you put that in there, Peasant. If you're trading an index or monitoring an index and any one component is 30% of that index, be very careful. I mean, you're basically just getting single stock risk again. So, yeah, good. Big Eb got pretty close. Les, you actually get the close. Les and Sam, I wish I had a trophy or something I could send you. Some merch. Still haven't been able to spend any money to go buy shirts or hats or anything like that for Trader Merlin. But one of these days I will. And have you guys help support me. So 12.5% for Apple, 10% for Microsoft, Amazon is 6.5%, and Facebook is 4.8%. So the interesting thing is this week, we've got Google, which is 7.4% of the NASDAQ. Tomorrow, you will have Meta, which is 4.8%. So let me just do some math in my head. That's 7.4. We have 4.8. And then you have Amazon, which is 6.5, reporting earnings in the next couple days. Now, you add those two up. That is 18.7% of the value of the NASDAQ 100 will be reporting. Just the top 8 companies will be reporting in the next, by Friday, right? And obviously there's a lot more that are reporting, but these are just the big heavy hitters. You notice it really quickly drops, in the 1.6%. So these aren't as impactful. PayPal today reported earnings as well, and they're 1.4%, down 13% on the day. People did not like that PYPL news. Here is your PayPal on a daily. And you can see right now, we are well down here at 148. PayPal today, they missed earnings by only 1 penny. and they're down almost 17%. Pretty crazy slide there. Margaret says that Apple has been helping the Qs. Yeah, of course it has. Apple has been one of the main reasons because, A, it is nearing all-time highs yet again, and it's the number one weighting in the NASDAQ, right? I mean, this is critical. It's 12.5% of the index. That's to me, personally, I think it's a little bit too overweighted, but hey, I don't make indexes. I just report the darn things. All right, so what else do we have with the earnings front? You had Google, you had ExxonMobil reporting earnings, continuing just a stellar run for energy. I know we were looking at some of the energy stocks out there with XLE in particular. Here's XLE on the day, looking fantastic. Another just monster move today for the ETF of XLE, up 3.56%. You know, my gut tells me this is going to have an abrupt end here, but you know, when you accelerate this quickly, I'm all fine with moves and trends, but you notice that this is like the steepest magnitude it's had for quite some time. And I mean, even going back into these runs that we saw back in 2020 out of October was really aggressive. This is a pretty strong up move, and you are coming right now into some areas of weekly supply. So I'll bring up the weekly here, get rid of some moving averages so we don't make our charts look terrible. There you go. You can see right now you're actually in an area of supply, not the strongest in the world, but you know, it's a bit challenging to try to go short at these levels, but at some point you're going to have to feel comfortable shorting this market because a lot of it is really overbought right now. See, Tom says, if you combine the search engine, a selfie phone maker, a selfie website, and a warehousing delivery system company, very famous, have you tried restarting? Yeah. I mean, just the first 10 components of the NASDAQ are just, in my opinion, way too overly weighted. Now, that said, Big Eb says QQQ puts soon. So, on that note, I did buy some puts today, but not a lot. I told you I'm going to really slowly be stepping into this. Actually, part of my reason I'm slowly stepping in is, again, I think a lot of people are bearish on the market, although I'm hearing some of my colleagues are just standing from the rafters screaming, we're going to all-time highs, it's got to go higher. Hey, it's going higher for right now. Who knows where it's going to end up? But I shorted IWM today. Not shorted. I bought puts. I bought the May put. So I actually paid a pretty premium for May on those puts. But I'm also getting, you know, a long time for that to come out. So let me show you where my dates would be, just so you can get an idea of how long I have on these options. And we're going to the third week of May, which will be right there. So that vertical line represents kind of how long I have for these options to expire, and they may expire worthless, but I will be out of them by then. I don't hold things typically to expiration, especially if I'm buying a put. I will most likely get out by the third week of April, which would be right around here. Now, just to give you an idea of how far out I went, and you know, everybody has their own methodology, but I went really below this area of the gap here, and I'm looking at 165s is what I bought today. So about the 165 puts, which all in all, you know, I did near the end of the day, so it was kind of nice. It would have to fall another 18% to get there. Long ways away. I don't anticipate it getting there, but I do anticipate the market selling off and getting closer to that gap. So the premium that I paid for that, which I believe, I think my premium on that was, I can't remember. I'll look it up here because I wrote it down. 280. So I paid 280 for that. If we get anywhere down below this blue line here, which would be 187, you know, I'll earn a pretty penny and be out by the third week of April for sure. Probably even sooner than that. I also bought some puts on SPY today. A little bit more capital intensive, but I went also fairly deep out of the money on those SPYs. I went all the way out to the 385s. You're like, what, 385s? They're not going to get to 385. Well, look, you guys see my print. Oh, that's not the print. I actually have this forecasted. Let me go to where I think the all-time high was. Let me go there. So I was looking at all-time high. Oh, say if you go off the top, 24% would be down at the 386 mark. And I had mentioned that I think we're going to go down 20% on the S&P. And here's 385. All right, so 385 would give me off the all-time highs a decline of roughly 20%. Off of current location from where we are, that's a slide of about 15%, which I think is absolutely doable if, and it's a big if we continue to get more inflationary pressure from the markets, as well as getting the central bankers to raise rates in March. So really a lot of this is kind of planning for the Fed being more aggressive in March. I don't know if you guys heard some of the other... Chris, I bought the Mays, third week of May. So I've got months, right? Normally when I'm buying a put, I'm looking at 30 days or more. In this case, I decided, 90 days or more. In this case, I went much more than 90 days. So we'll see what happens over the next couple days. I still think there is some legs left up in this move to the upside. Right now it feels good. I think you're going to get a pop tomorrow. I don't think it's any surprise by anybody here that we'll get a pop up in the NASDAQ because of Google and the 20-to-1 split. I believe you'll also... I don't know which way Facebook's going to report earnings, but Facebook reports earnings tomorrow and then Amazon as well. And I think... my gut tells me you're going to get a 20-to-1 split for Amazon as well, which could add another bump, which means that next week will be the week to start really looking at shorts once we come into all-time highs or even break all-time highs to look to short this market more. Anyway, there you go. So we've got Google out of the way. We talked about Alphabet. To me, absolutely lending a lifeline to the market, which is going to bring in a lot more money tomorrow in some of these FANG stocks, I believe, and draw more attention to them. There were some biotechs, but I will hold off on that one because I have questions coming from viewers on a couple different topics. So there we go. Buying puts on an up day. Yeah. Why not? Buy them when they're cheaper, right? And it's funny because I was watching the market and it was like, okay. And it felt like I had more upside move. And I was kind of like, well, maybe I'll wait till tomorrow. But I dabbled a little bit. So I got 5 of each. I got 5 S&P and 5 Russell 2000 puts. And we'll see how it goes. All right, so now I got listener questions. What is your analysis of Ford? From Dave. I don't really look at Ford too much. I'm not a big car guy. But, you look at the price chart of Ford, and we can just start with, price chart of Ford and start with the weekly time frame here. Ford looks great. I mean, when's the last time you heard somebody say Ford looks great? I mean, the lows we saw back in 2020, this is just a beautiful higher high, higher low. The only thing that's nerve-wracking is what it's done, about 3 weeks ago, you had that really aggressive sell-off. Well, I kind of, for me personally, I look at this and say, I'm actually comfortable with Ford, but if we get down below this low that happened on the 6th of December, right, and I realize we could probably make multiple lines here and go to where most of the bodies contact, which would be there. Either way, I think you have to, I don't know about that, Noam. I'm not sure if uranium's in XLE. I'm sure there's probably a couple little tiny ones in there, but not really sure. I can look into that one for you. Anyway, with Ford, Dave, I actually like it. I think you had a great pullback into this long sideways area of, just transition process. And I think if we were to do the yellow box just for fun, it's obviously too late for that now. You're left with something like this where you can either just play those highs or most likely buy those dips. Well, you had one 2 days ago. Came right in those lows. The key here is if it does get below, let's say, 1855, I think you got to unload it. Right, and it's nothing to do with Ford. I think that they make a great product. I love the new Lightning truck. That's amazing. I kind of wanted to buy one. I was like, but I just want to spend that kind of money for the Lightning. But, my belief in a company is really all about their price chart. I can make all the opinions about what I think about Ford, or, I know a lot of people, there's an old mantra out there that Ford stands for a bad 4-letter word, blanked over rebuilt Dodge or something like that, right? Or fix or repair daily was the different name for Ford in the past. And hey, you know what? I think they've done a much better job of craftsmanship and quality, but it doesn't matter. Price chart tells me what the institutional money is doing, and if I'm trading Ford, that's where I think it's going to go. Chris will tell you. Chris is a mechanic. What's better, Ford or Chevy? He's like, none of the above, Tesla. All right. Let's see. I'll get to AMD in just a second. I want to make sure I get through ones that sent in questions. So again, if you have questions, send them to me at TraderMerlin@gmail.com, or you can put them down below the video on YouTube. That helps out as well with search algorithms. So if you guys ever want comments, push them down below the chat. That's the best way to get to help me out in the process. All right, Jeff. Jeff G says, I know you hate biotech, but what about BBH? I don't hate biotech. I don't hate it. Biotech's amazing. I mean, biotech to me is the future of us living to triple digits with consistency, right? I mean, if I can make it to Found on the Road Dead, that's a good one too. If I could make it to 130-year-olds and still feel good and be active, not confined to a bed and have tubes stuck in me to live, then biotech's awesome. Better living through chemistry, as a friend of mine used to say. So I don't hate biotech. What I hate biotech for is in my trading for some reason, it's always just decimated accounts and bad trades, so I just don't trade it. But I love the concept and what it does for us. So you asked about BBH. I do follow it, so I don't believe that you should be buying individual companies in biotech. I think it's way too risky, all right? The only thing that it takes is a FDA make or a miss, and all of a sudden this thing's gapping up or down, 80%. So I understand why, Jeff, you're asking about BBH, because this is the VanEck Biotech ETF, and this is just a portfolio of biotech companies. In that respect, I would say, okay, fine. I would actually probably feel okay getting some biotech ETFs in a portfolio that I own. It's just the single stock risk I can't take anymore. I'm done. It's in my trading plan. I can never trade biotechs. But could you buy an ETF? Sure. Now, I don't know why I would buy BBH over another one. For example, BBH, one of the big things you got to notice here is obviously it's got some great price swings. That's just biotech. But look at the volume. Right, the volume, even on these big spikes, some of the biggest spikes you see on the chart here, that's only 70,000 shares traded a day. To me, that is not good. I mean, if you have 70,000 shares traded per day, that means you have extremely low liquidity, and the spreads could get very wide. If you are looking, you could look at something like XBI is probably one of the more popular biotech ETFs, and notice the volume just yesterday was 13 million. So I would probably tell you, Jeff, I wouldn't really go with BBH unless there's a company that's in BBH that you really have to have in your portfolio. Then, fine, go for it. But I would look around for something that has higher liquidity. 70,000 shares per day at its peak is not good. This one's average. I don't have the average on here, but if you look at the horizontal line I'm drawing on the volume, it looks to be, 5.5 million per day. That's fairly liquid. You could get in and out kind of at your leisure and not suffer from slippage and potentially even trade some big positions. Now, what do I think about the price trajectory of biotech? Well, let's look at this on a longer time frame chart here. Again, I think that biotech had a little bit too big of a run with all the COVID stuff. I mean, you can see where we were when that started. Right, when COVID hit and we hit those lows, we were at $62 on this biotech ETF, rallied all the way up to $174. A pretty significant gain. Now we're just pulling back, but the question is, where are we pulling back to? This looks to me like it's coming right back down to a 200 period moving average. Right, it broke down below it, but it still has an upward trend. So I think actually, if you're looking to buy biotech, it might not be a bad time. Why? Well, because we're reverting back to the mean. Normally, prices revert back to the mean. If you don't know what that means, type it in chat and I can explain what that means. But really what you're generally looking for is if something gets overextended, right? And anybody who watches this show knows that if I had a chart that looked like this, and you guys can see where the moving average is here, here's the 200, and we had it way up here, I'd be going, guys, do not buy this. It's going to revert back to this mean at some point, right? It's going to come ripping back down. That's dangerous. And of course, it did. I was not in it because I don't trade biotechs. But now we've overshot it. Well, the question is, where's it going to go? If you look at the long-term trend, it looks like it's sloping up at a pretty decent angle. I'll mock up a trend line here. Let's go from these lows back here. I'll take that moving average off. Yes, it did tiptoe below it right here, but we have multiple points of contact on this line, and it just actually literally bounced off it a couple weeks ago. So all in all, I think it's probably a decent point to be buying into biotechs. Again, anything that you're buying right now, you have to be careful because we could be in the midst of a much broader sell-off in the markets going forward. So again, just kind of heightened awareness to your trades. Make sure that you aren't taking too big a risk, but why not? Jeff, I think BBH or XBI, I wouldn't do BBH personally just because look at the liquidity, but it also has an overall uptrend. Doesn't look as clean as XBI. Right, a little bit more chop to it, but there you go. Is this a dead cat balance on indices or reversal? Personally, I expect it to hit 420 on SPY again. It's oversold. All the uncertainties are there, and because of technical, we had to bounce up. That's a tough one. I can't make that statement. I have, in my mind, I think what you're going to see is just a slight bounce up. I think you're going to come back, and this is a weekly, right? I think you'll come back and test some supply zones. So where are those supply zones? Well, there's nothing that's like really clean right now until you get up to your 470 mark. I don't think you're going to get up to that 470 mark personally in this next rally. If you look at my my head and shoulders pattern here, this is what I was kind of expecting to form in the market. And it's already above that. That's fine. We'll see what happens over the next couple of days here. But, who knows? Right, Mo? This could all of a sudden rip up and we could see it breaking all-time highs yet again. It's very possible. I do believe personally that if it does break these all-time highs, that's going to be one of the biggest bull traps ever. It's going to bring people in and then we're going to come back down. There's just, in my opinion, there's just too many factors that are pointing the market to go down, but I can't go all in. Right? I can't go all in on this thing. I have to kind of go slow because right now I'm slightly wrong on my short position. Slightly. I mean, we're talking, I'm probably, $50 negative right now. No big deal. Maybe $100. But, if I get above 4,800, I could lose a lot of the value of those options. So I got to be careful here as well because I'm going counter trend. Ford invested $20 billion investment today to increase EV production. And General Motors did the same thing. General Motors invested, I want to say $7 billion, right? So both of these companies, guys, Ford, General Motors does not look as good as Ford, right? Here's your daily, and you can just see that it's really been kind of floundering along, hasn't really done much since 2021, whereas Ford has been making higher highs and looking much better. So Ford, as a company, looks way better, but again, that's just price charts. That's not even looking at any of the fundamentals, etc. So yes, they're both pouring money in. And, again, I mentioned this the other day. What is this? What does this mean for Tesla? Right? Does this further put pressure on Tesla to the downside? I don't think so. And the reason I don't think so is it's going to take years for GM and for Ford to get all of those facilities up and running. Maybe not years, but at least a year, right, to get all that stuff up and running. And I just think it'll take too long to really impact these short-term prices of Tesla. Eric says late to the EV party too. They are late, but they have, the infrastructure. They have a lot of equipment. They have a lot of facilities. They got the staff to ramp it up. The big thing going forward is, are they going to have the same sort of reviews and reliability of their products? Because what will ultimately come down the road, I think, in the next couple of years is, okay, I've got a Tesla, a GM, a Ford, a Toyota, a Rivian, a Lucid car. I got all these different ones. Which one's going to be the best? The best bang from a buck is what most people look at. But bottom line is, if your car dies for you, it dies in a year or two because your battery sucks, well, you're going to get a lot of bad reviews on that one, and that company will probably fail. So, who's got the best batteries at this point? Tesla. Tesla seems to still really dominant. Does Ford and GM have more upside than Tesla? I don't know, man. I think that they can easily get up to speed with Tesla, with production, right? They just have so much distribution, and I think they have everything mastered except the electric part of it. So I think they can fix that. Now, if you go and look at the technology that Tesla has, I think that GM and Ford are years behind the AI. I think Tesla's really been doing the AI thing. So to me, that's where Tesla has a huge advantage, is the artificial intelligence that's running the driverless cars. It's one thing to make an electric vehicle. What we all are, and not we all, but don't lump anybody into that category, but what I'm waiting for is a fully autonomous vehicle where I can literally go down to my local haven here and I can watch the Super Bowl, I can have 5 or 6 beers, and I can just hit a button and my car will automatically, with nobody in it, drive from my house or park down the street, come pick me up and take me home without me ever having any risk to myself or liability or DUI type of material. So that is something that's coming, and in my mind, Tesla will be the first one there. They have just years and years of data collection. Remember, every car that they have, every Tesla on the road today is collecting data for them. Right? If you have a Tesla, you are all part of one gigantic data collection entity, and that is Tesla. They will lead in AI. Ford doesn't have that yet. Neither does GM. So to me, that's what makes them, in my mind, incapable of achieving what Tesla is. But that's just my opinion. I'm sure we got other people here going, no way, no way. By the way, I'm hoping that you guys didn't notice any issues today. I spent all weekend trying to get this room wired. You guys might remember we had some issues last week. No clue why, but this plug in the wall just died. So I am now broadcasting Wi-Fi, which is crazy to think that I'm broadcasting with wireless technology. I know some IT people are probably cringing right now. My speeds are awesome right now. I'm getting really good speeds. I did all kinds of configuration because I'm a little bit of a geek. So yes, until I get this house wired through the wall that's directly behind me, I will be using wireless, which is kind of a shocker. Yeah, but OnStar is different. OnStar, and I'm not saying it's not the same case, but OnStar is, tracking a little bit, right? It's got a little bit of data. Tesla's got 8 or more cameras on every car looking at every angle from the rear, the sides, the top, the front, and scanning data. So I think in that sense, they are definitely miles ahead. Not that the GM has no data collection. OnStar obviously gives you some, but I don't think it's anywhere near what you're getting with all these cameras reporting back to one general database, which is pretty impressive. I would love to have like an in-depth explanation and dive into all that Tesla is collecting. And if there was a video, I think I may have posted it for you guys maybe a year ago, where the guy who heads up the AI, he was presenting with Elon Musk, and Elon just stood there, but this guy gave an incredible speech on the AI of Tesla, and it really made me a believer in what they're doing. Anyway, let's see, I got a couple more questions I got to get through. I thought this one was funny. Does the amount of the U.S. debt concern you? Lisa, yes. Let's go look at the debt clock real quick. Yeah, it absolutely does concern me. So here is the official one. I think that this is behind. I was actually reading today that we officially went over $30 trillion worth of national debt. That's insane. That is absolutely ridiculous. We should be in that much debt. And one of the main reasons it concerns me is if you go back, years, you go back to Greenspan, we didn't have a huge debt to GDP ratio, right? We didn't have it. I think you can see it on here. Debt to GDP is 141%. Right? That may seem like a lot, but years ago we were nowhere even close to this. And what that means is, for Greenspan and Volcker, they could do a lot of really aggressive policies, and they had much more flexibility to help the economy, to stimulate it. But as this debt to GDP ratio grows and grows and grows, it becomes much harder for us to facilitate that debt. So what it is it's kind of constraining governments and central banks from doing a lot more quantitative easing. And at this point, they've kind of backed themselves into a bit of a corner. So it will be very interesting to see how it goes forward. But I think that our current situation is far worse than it was back in, the 80s and the 70s, 60s, even the 90s with regards to what we can do. We are handcuffing ourselves with all this debt. So yeah, I think we just broke the record of 30 trillion. So we might even break it by the time the show's over. This thing moves so fast. I used to love doing this. I would say, all right, let's see what the national debt is, and I would just start it when I started the show. And like, oh wait, great, we added like $30 million worth of debt in the last 30 minutes of a show. So yes, I absolutely. Is Bitcoin on here? I don't see Bitcoin on the debt clock. I don't know where that one would be, but just look at Bitcoin on the debt clock. Let's see. What else do I have? I think I had one more question. My apologies if you've already done this, but I'm going to ask again if you haven't done it. Algo and USDT. Okay. So I don't have. I'm not going to log in. I'm not going to log into my KuCoin account right now, but if we'll just go in to look at Algo against USDT. So Algorand, which I am a fan of. If you look at the price charts, let me go by symbol here. Here's Algorand, it's up 1.8%. At this point, all these cryptos look like this, right? They're just basing, and at least for the past 2 weeks, have just been kind of basing. And you mentioned they're going long or short on it. I wouldn't go long. If I had to do anything with Algorand, I would go long on Algorand just because I like the project. I like what they're doing. I like how it's actually being accepted by other people in the community, like Charles Hoskinson. So I would actually be looking more for the long position. But as far as using KuCoin, you could use KuCoin. You could use any exchange that allows you to buy or sell Algorand. But my question would be why are you looking at shorting it, right? Either going long or short. This does look like a bearish flag formation. For those who don't know what a bearish flag formation is, it's where you have an aggressive impulse down, and then you basically can draw like a channel on price back up. And this is a bear flag which for most people would be a very bearish thing. And the ideology here is that if it breaks, it's going to move down that much. Well, look, that's going to put Algorand in a negative territory. It would be literally negative. Yeah, don't think that's going to happen. So, again, if you're an active trader, I would probably look for something that gives you a better moves, KF, right? Active trading, a $1 security, or it's a 96-cent security right now, probably is not going to be the best option. That said, you do get, depending on where you live, you can get 10 to 1 or 100 to 1 leverage at KuCoin. So that may help out. But there's a lot of other things that have really great trends going right now. Solana has been one of the good ones. Unfortunately, I did not get filled on my Solana, and it's got a nice rip up. Right, so now you've got this curl going. Nice move to the upside. Chainlink as well, starting to curl. A lot of these are curling back to the upside. Opinion of OKCoin, it's okay, but I'm dumb. There's so many exchanges. One of the things I built for my CIL students is I have a spreadsheet that just kind of breaks down the different exchanges, and there's so many different ones. The key for everybody here is make sure if you are using a specific exchange to do your research. One of the topics we're going to talk about tonight is what's going on with Wonderland. And I'm not going to cover it here, but Wonderland, you got all kinds of real shady criminal activity going on behind the scenes, and it makes you question the integrity of some of these projects. So do your research, right? See who's involved. See who is actually driving that boat before you jump on board and end up crashing because these people are doing somebody illegal, right? That's... Again, there's a lot of shady crap out there. Now, as far as exchanges, you look for longevity, you look for customer feedback, you look for assets that are on there, you look for leverage and things like that. So KuCoin's pretty good. I use Kraken and Coinbase predominantly because they're US-based, but there's a lot of them out there. Happy February, Jordan. Jordan, when are you going to come on the show? The viewers want to see Jordan Matthews. Come on. Crypto, lower right-hand corner of the depth clock, not Bitcoin. Lower right-hand corner of the deck clock. Gold prices. No, I don't see crypto to dollar. Dollar to crypto ratio. Yeah, I don't know how to read that one. I don't know. How you hedge your short positions currently? Do you hedge? I am confident. Oops, sorry. Let me read the questions out here. Let's go back to the market. And I'm confident about my bearish positions, but it's good to be safe. I don't... I know, but psychologically it hurts when I'm down. Yeah, of course, it always hurts when you're down. Of course. It always hurts when you're down. But the key is to not be down too much, right? So if you look at the current positions that, or at least the ones I opened today, going short something like the S&P, I'm putting myself against the overall trend. You had huge up moves, and it's been trending real strong. So the tendency is for this to continue. But I like the fact we just kind of made this new lower low. It really is all about what happens now. Do we make a new high? If we do, I've got to exit my short positions. If we don't, I'll be adding to. So if we get up here and end up stopping, let's say right around 47, which I think will stop before that. But with the news from Google and I think Facebook and Amazon this week, we could get a nice continued run. But then there's not much more out there to at least for me, to boost this market. So I would be looking at 47 as kind of my hard stop here for shorts. But that's the only hedging I do. Hard stop, I'll just put stop losses in. Let's see. What does Arizona trying to add crypto? It doesn't mean too much at this point. It's all talk track at this point. You had also the same thing happen in Wyoming, and Wyoming, set up digital banks, and the Fed won't even recognize them. So it's not the great. Is the Kraken safe because they're crazy? Wix is always different on other exchanges. They're all going to be different, KF. So every exchange, remember, if you trade on Coinbase, you're trading against Coinbase's customers. If you trade on Kraken, you're trading against Kraken's customers. If you trade on KuCoin, you're trading on KuCoin's customers. So it's all fragmented. In theory, the prices should all be the same, but because they are not connected to each other, you do get different prices. Now, occasionally, there are systems that arbitrage. So if they can buy Bitcoin on Kraken for, let's say, $31,000 and sell it over on Coinbase for $31,500, they'll do that and arbitrage that $500 in their pocket. That's fairly normal for algos to do that and have bots that create this kind of arbitrage thing, which is what keeps most of the exchanges fairly normal. The big thing for UKF and anybody who's trading crypto is look and see how active your crypto is, meaning the one that you want to trade. So in this case, you mentioned Algorand. check and see how liquid Algorand is on the exchange that you are trading on. If it's not liquid on KuCoin, then don't trade it on KuCoin, because a small order could create huge wicks and volatility. If it's the most active on Binance, then use Binance if you can, because that has the best pool of liquidity. The only example I can give you that really resonates with me is if you're diving off a diving board into a swimming pool and you're on the 3-meter board, right? So you're 9 feet off that water looking at it and you're like, oh, I'm going to swan dive in. Probably important to know how deep that water is. If that water is 3 inches deep, you're going to shatter your face and all other bones in your body if you land in that water, if it's just an inch or two deep. But if it's 20 feet deep, dive straight in. You're not going to hit the bottom. So liquidity becomes critical in our ability to exercise our trades and get in or get out when and where we want. Is that like FX? Yes, it's exactly like FX. I think the difference is there's much fewer Forex brokers, right? Because there's regulatory issues that FX brokers have to comply by. So you tend to get fewer FX brokers. And then with crypto, there's kind of Wild West and not a lot of rules in place right now. We're seeing some rules being put in place as we speak, but for right now, it's still Wild West for cryptocurrency. So you got hundreds, I think there's like over 500 different exchanges now in the crypto space. All right, let's go to your economic calendar and earnings calendar for tomorrow. I wanted to mention this one specifically because of this number here, this ADP non-farm employment change. This is what's happening for tomorrow on the economic calendar. Only number I'm looking forward to is this one, the ADP non-farm employment change. And here's why. Look at the drop they're expecting. 807,000 was the previous month's reading. They're expecting to go from 807,000 to 185, which basically is saying that the job market just completely evaporated. Like, it's crazy to think we'd be that low. And to put it in perspective, I did not put the chart on here. You gotta be kidding me. I take time and effort to build you guys presentations, and sometimes I don't even get the presentations done in time. So let me add in a slide here and show you this because it is a very cool graphic. Let me move this over here and pull this page for you. It's really cool because what it shows is that I am not prepared. Where is it? We'll go to my, oh, I know I did. I put it in my presentation for my crypto tonight, which I will be doing here in just a couple hours. So let's go to the first, and it's called ADP. All right. There we go. There's ADP. So here's your ADP non-farm employment change data. You guys notice, let's see if I can get this pen to work without causing problems again. Every time. All right. So you can see over here 807. Right? That's your 807 number. Well, right now they're expecting it to be 187, which is down here. That'll be the lowest we've been in a year on job creation. That's not good because remember, part of the platforms they've been talking about so much with regards to the Fed has been job market is good, job market is robust. Well, if we go from 807, which is our actual number, down to 187 down here, that's not good. That means our next chart's going to look like this. That's really bad. So we'll have to wait and see what the number is. But to me, that's your major piece coming out for tomorrow. You do see there are a couple other pieces. You got crude oil inventories, which of course would be very interesting to watch given what's been going on with crude oil. You had another slight move up today. It's been doing pretty damn well. So we'll see if those inventories numbers impacted. And then your earnings for tomorrow, again, after market close, AMC. You got Facebook. Aftermarket close, Qualcomm, Align Technologies, you have MetLife, that's all aftermarket. And before market opens tomorrow, Waste Management, Marathon Petroleum, and AbbVie, and that's just some of them. There's many, many, many more than that reporting earnings tomorrow, but I thought I'd just put some of the big names out there. Will be exciting, and of course, I guess I could throw my graphics since I paid to have these built. We are having a popcorn trade of the day, and that will be Facebook, and today we had the Google popcorn trade of the day. All right, let's see. Do you have any Discord group or real-time trading platform? Nope. No. Sorry, I've never really been interested in like running a trading group or having people follow me. I mean, I do make trades in the crypto, but I'm not very active in the crypto. I'm more of a hodler, but I move and transfer around real money all the time in that one. So sorry with that one. No, Mo. Why can't they create something like a NYSE or CBOE for just crypto? We're all listed under one exchange. Because what that does, that defeats the whole purpose of it. Because you used to have decentralization as the key, right? Decentralization, getting everything where nobody controls it. That's the challenge. Now, could they create connections? Yes. Part of the thing that I've been discussing with the CIO members is there are technologies that allow for multiple blockchains to connect to each other. And if we can get to the point where we have, let's say Uniswap and SushiSwap and PancakeSwap and all these different DEXs connecting through one hub, then you start to centralize everything. And that, of course, has its risk, because if you centralize, then you could potentially shut it down. So that's why. Because you don't want centralization in digital assets and cryptocurrency. That gives it its power. Bitcoin. If you centralize Bitcoin, the government can come in and say, turn it off, Bitcoin's done. But because it's decentralized, they can't touch it at all. Let's see what else I have. Chelsea, MGY. I have to go. I've got a call here in a second, but I'll do this MGY. There was another one you guys wanted me to look at earlier, so I pushed it just a little bit. MGY. Oh, Marathon. Magnolia. This looks great. Chowsky, you bring up some crazy ticker symbols every now and again. Most of them are like, man, this is a gamble. I think Magnolia looks great right now. I mean, this is everything that you want in a stock, is it not? You've got higher highs, higher lows, trending up. It hasn't made a new low. I wouldn't buy it right now. I'd wait for a pullback in this thing. But I'll tell you what, since 2020, actually late 2020, this thing's been great. So I think it looks real good. There you go. What was the other one? I know I was supposed to look at another ticker symbol, and I passed that one over. Sorry. The perils of a live show, everybody. Susan, if you're still here, she wanted AMD. Now, I think AMD kind of falls in the same category that we mentioned earlier, which is, at a certain point, you got to look at it, is this a value play, right? I mean, AMD, off of its peak that it had established back here, and I'll go from peak to trough, you're down 39%, far more than the market. Of course, we know why. It's because chips and technology led up, therefore they'll most likely lead the way down. Does that make AMD a buy point right here? Boy, it certainly would have been a great one at 100. I mean, I know hindsight's 2020, like, oh, shoulda, coulda, woulda. But if you were looking to buy this, and if we looked at this on the program, that's the area. So right, this origin, this big, massive pop out. So late to the party right now, but yeah, I think it looks great. You've got a great pop to the upside on AMD right now. Unfortunately, you're a little bit late. Now it begs the question, Susan, are you interested in buying AMD because you think it's going to rally back up and maybe challenge those highs at 160, 165? I don't think we'll get there, but could we make it to 140 on AMD? Yeah, you could. I think you get up to here, this area right around the 130. That's a more logical target, but it's still in an uptrend. It just had a really significant pullback. It's a big pullback. But anything below $100, yeah, now you got to be out of it. You're keeping me going, Mo. I gotta run. I'll look at the Dixie. Dixie didn't really do much today. I'm definitely very bullish on the dollar index. I was kind of surprised to see this pullback the last couple days. I thought once we broke that 97 mark, that would retrace just a hair and then pull back to the upside. But again, uptrend, higher highs, higher lows. I think that the dollar will continue its uptrend, which puts further pressure to the downside on the equity markets, right? So that's part of it. You asked about the VIX. I don't really follow the VIX. I think VIX is broken in my opinion. But now you've got VIX so low. This is part of the reason that I was buying options today. I want to buy when nobody else, when people don't care, right? Because I can buy them much cheaper. If I was trying to buy puts 4 days ago or 5 days ago, super expensive. Now they're getting cheaper. So that's really the only thing I look for with the VIX is maybe more timing my entries with options. Of course, I just look at the price charts. And if I know the equity markets have rallied a lot, options are going to get cheaper and cheaper and cheaper. Now, the 10-year is an interesting one. We've been looking at the 10-year quite a bit as kind of the benchmark for interest rates, right? My target is still on here. I think I said 250 was my target for the year, that we would close above 2.5% on the 10-year. I still stick by that. I think that if it really gets moving, we could be actually even higher than that, maybe even above 3. But look, the trend is your friend, man. Higher highs, higher lows. I got a little trend line down there just for support. All in all, I think the 10-year is going to keep moving up, which again puts pressure on the housing market, puts pressure on the equity markets. The higher this gets, the more expensive capital becomes for everybody. How do they know how to tax Bitcoin profits if Bitcoin is decentralized? They trust you. So here's the thing. If you buy your Bitcoin on Coinbase, that's a centralized entity that facilitated the transaction. So Coinbase can report to the IRS that you bought this and that and the other thing. If you buy things on a DEX, a decentralized exchange, there's no real reporting agency or entity. So in theory, you could hide or not report transactions that were made on decentralized exchanges. However, I have a serious fear for the IRS. Not fear, I guess, just and respect isn't the right word, but I don't want to ever do anything for me that would put me in any jeopardy with the IRS. So I'll pay my taxes, I declare things, but some of you may not want to, and that's just a risk that you may have to take. But if you buy Bitcoin, and you sell it, that is a transaction, and the IRS here in the United States, they want their share of that. So. And this is the big discussion going on right now in Thailand. It's going on in India on how to tax cryptocurrency and those actions. Most people are buying through centralized exchanges like Kraken, like Coinbase, like KuCoin. Those are centralized. So all transactions there are being monitored and recorded and can be reported to a tax authority. All right, that's going to do it for me, everybody. I got to run. I got a call here in just a couple minutes. So thank you so much. I know I got to a just don't look good in stripes. No, I don't. Or an orange jumpsuit with a cellmate named Bubba, that would not work good for Merlin. You might, that would not be a good thing. Thanks for that. you want to, here, I'll give you one last one. You want to talk about crypto tax evasion? You can deposit your, I don't have time to bring up, but you can deposit your cryptocurrency in certain sites. Like you can take your Ethereum right now, deposit it into an account, and literally launder your money. There are digital money laundering sites you can use, and they're actually going to get a bunch of regulatory attention here soon. But that's it's a very interesting thing that's happening. Like if you're a gangster or somebody needs some money launder money. Remember the TV show Ozarks? Ozarks was so hard for them to launder money. They got to buy laundromats and hotels and their fake receipts and casinos and all this crap. Now you just deposit it on this one website. Bam. Your money is now cleaned, washed, rinse, repeat. Nobody would ever be able to see it. All right, I got to run. So thank you guys so much for joining us today. If you have questions, email me at TraderMerlin@gmail.com, or probably the best way, which would be the most helpful for the show, is put all your questions down below this video. That way it helps with the search engine optimization, and I usually look there first to answer questions. But you can always email me if there's something else that you want to check out. You can email me at TraderMerlin@gmail.com or put it down below the YouTube channel. All right, everybody, that's going to do it for me. I will see you on tomorrow's show. All excited about Facebook's earnings. Till then, happy trading. I'll see you tomorrow.